The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Did the tariff fog actually lift, or did the situation get even murkier? Welcome to The Close and special coverage today of a landmark U.S. Supreme Court ruling that deemed President Donald Trump's Liberation Day tariffs did indeed exceed his authority under the law. I'm Romaine Bostick.
And I'm Katie Greifeld. We're kicking you off to the closing bell here in the U.S. on this Friday. Let's take a look at least at the market reaction, because the direction of travel is clear. After some volatility in the wake of that 10 a.m. ruling, you can see that the S&P 500 now higher by about 0.5%. And it's interesting, we're being led by big tech once again. The NASDAQ 100 higher by about 0.7%. You take a look at the bond market, not too much movement overall. The 10-year Treasury yield higher by about 1 to 2 basis points right now. And meanwhile, we are keeping an eye on crude. Of course, this could be a consequential weekend for geopolitics. President Trump saying that he's not ruling out a limited strike on Iran. Crude right now pretty much even on the day, Romaine.
Well, just about 5 hours after that ruling, the market reaction so far to Trump's biggest legal defeat since returning to the White House has been just as mixed and muddled as the Supreme Court opinion itself. But for now, the net effect of this is that the average U.S. effective tariff rate, at least for now, gets cut by more than half, from about 13.6% to 6.5%. But that's still 4 percentage points above the 2.3% rate when Trump took office 13 months ago. Now, remember, it was 10 months ago, around Trump's Liberation Day tariff announcement, where we saw the more significant market reactions. The biggest U.S. importers seeing the biggest hits to their stocks in years. General Motors plunging 19% in late March through early April. AI chip darling NVIDIA sliding more than 20%. Apple losing 30%, Nike 35%, and furniture retailer RH cratering almost 60%. And while most of those stocks have rebounded from those lows, investors today still trying to parse whether there is any additional upside from today's ruling, given the more than $170 billion in collective tariffs that maybe could be refunded. Or maybe investors need to model in the possibility for a regression to the downside, because after all, while the Supreme Court may be the highest court in the land, the president making clear today that he, in one way or another, will have the last and final word on which tariffs stay and go.
Today, I will sign an order to impose a 10% global tariff under Section 122, over and above our normal tariffs already being charged. And we're also initiating several Section 301 and other investigations to protect our country from unfair trading practices of other countries and companies.
And that was President Trump reacting to the Supreme Court's decision earlier today, Katie. A lot to parse here about what just happened and, more importantly, what comes next.
Well, let's put tariff revenue, as you mentioned, into context. Of course, those refunds in open question. We know that's going to be a drawn-out process, but take a look at the bar chart behind me, going back the past year or so. April 2025, this is when Liberation Day initially happened, and you can see that the tariff revenue that the U.S. has been collecting since that time has continued to march higher. And certainly the estimate for February, you can see here, was well over $200 billion. So a lot of questions here when it comes, of course, just to the law, but also whether or not those refunds actually will go back to some of the importers. And if so, what is the economic hit? Since you think about Trump's economic agenda, a lot of it relied exactly on what we're seeing in the chart behind me.
And that's a good point, too, because there is a big policy implication in this potentially as well. So let's kick you off to the close today with Gina Raimondo. She was U.S. Commerce Secretary during the Biden administration, former governor of Rhode Island, and now at the Council on Foreign Relations. And Gina, I do want to start with the policy implications. We should point out, of course, that Trump used these tariffs as ostensibly a policy tool to negotiate, in his view, better trade deals. And I am curious, at least for right now, those trade deals are still in place and not affected by this. But do you think we will see more of a policy shift potentially by this administration, or does it stay the same?
Good afternoon. It's a big day. Thank you for having me. It's hard to say. I mean, certainly listening to the president this afternoon, it doesn't seem like he is going to change his approach. I would say, and having been Commerce Secretary, tariffs aren't always bad. right? There are many cases in which other countries have taken advantage of us, have hurt manufacturing or hurt farmers in the U.S. because of an unlevel playing field, and that's why we have tariffs. And appropriate use of targeted tariffs for strategic reasons is a good thing. Of course, in this case, that's not what the president did. As the Supreme Court said, he didn't have the authority to use the blunt, broad-based tariffs. But it is important to remember not all tariffs are bad.
Yeah. Well, I am curious about that. When we go back to the Liberation Day tariffs, we were talking about levies ranging from about 10 to 50%. But these were also sort of targeted at specific countries, and the idea it was supposed to bring them to the negotiating table. We've seen some of those deals struck. You've had a chance to look at some of the data that's occurred so far. Have any of those actually, in your view, maybe actually been beneficial and effective in their intended purpose?
Again, I think certain, for example, in the case of China, which is really the key economy we need to focus on, there's no question that there could be an appropriate use of tariffs vis-a-vis China. We know the government subsidizes and dumps products in the global market, distorts the prices. But I think the really important message of today is that the system of checks and balances in this country worked. And if anything, I think it makes America stronger. If anything, it gives us even more leverage in the world because it shows the world, it shows global businesses, our judiciary is independent, it enforces the laws. And, you asked me in the beginning, what will Trump do? He seems to still want to go ahead with tariffs, but now he's going to have to do it in accordance with the law, which shows the world and our allies our systems are working, the judiciary is working, and we're a stronger country because of that.
Well, when it comes to China, you think about the stance of some of the other nations in the world. Mexico, for example, has already raised tariffs on China. A French government advisory panel just this month proposed tariffs on China, hikes coming from the EU. Do you see any room here for a coordinated move by the West against China when it comes to some of the overcapacity here? And do you think that that's something that you would advocate for?
It is certainly true that in order for the United States to effectively compete with China and their distorted trade practices, we're strongest when we work with our allies. I was in Munich last weekend at the security conference talking to a lot of Europeans. When China subsidizes a particular product and then dumps that product into the global market, it doesn't just hurt America. It doesn't just hurt American workers, consumers, and farmers. It also can hurt Europeans and Mexicans and Canadians. And so it's definitely the case that we would be stronger working with our allies to combat the unfair, in many cases unlawful practices of the Chinese government.
And Gina, I also want to ask about what we're seeing on the domestic front when it comes to some of these multitude of companies that have filed suits against the government, basically trying to secure a refund for these tariffs. As of December, you are a board member of Costco. And I'm curious, when you think about the process ahead of us, what is the kind of timeline that you're thinking about? Certainly we saw from Justice Brett Kavanaugh today saying that this is going to be a very messy process. Is that your expectation as well?
It is. Look, it's hard to know. This came down a few hours ago. But one of my concerns about the whole way that the president has gone about these tariffs, apart from the fact that he overreached his presidential authority, is it's just created so much uncertainty. And today we have more uncertainty. Will there be refunds? How will that work? When will that happen? Will the 122 tariffs that he put in place today, it just creates a lot of uncertainty, which is why, it's why we have rules and process. There are plenty of ways for a president to effectively, strategically, in a targeted way, impose a tariff. As the president said today, 301 tariffs, 232 tariffs. But the important point is follow the law so that we have certainty and predictability, not chaos. And unfortunately, I do agree that this now adds a little bit, more uncertainty. The good news is The Supreme Court did its job, it is independent, and the rule of law has been supported in this country. And that should give every business and every American comfort. But yes, I do agree, it's still uncertain.
All right, Gina, have to leave it there. Really appreciate you taking the time on this very consequential day. That is Gina Raimondo. She is Distinguished Fellow at the Council on Foreign Relations and the former U.S. Commerce Secretary. Meanwhile, we're continuing to watch these markets, keeping a close eye on the Bloomberg Dollar Index. And similar to some of the cross-asset moves that we're seeing right now, not too much movement. So let's unpack this with Sinead Colton-Grant. She is Chief Investment Officer over at BNY Wealth. Sinead, it's great to see you.
Good to see you too, Katie.
So let's talk about what we're seeing. You did see a lot of volatility right at 10 a.m. Across markets, but that seems to have kind of settled down here. Was this priced in?
Well, here's what we're telling our clients and what we've been saying for several weeks in the run-up to this decision. Our expectation was very much that the administration would immediately look to what's our backstop plan? How else can we put these tariffs in place? And I think the decision has been long anticipated. The announcement from the administration that they're now looking at other ways to impose tariffs, some of which could potentially be even farther reaching. You know, that's why you're partly seeing the positive equity market reaction. Now, bond markets are interesting because the reason you've seen the bond market sell off a little bit is because there is just ever so slightly a higher possibility that you don't have more tariffs or replacement tariffs put in place. That brings into question the level of outstanding debt, the revenue coming into the country, and that's what you're seeing the bond market react to a little bit. But the equity market reaction, we think, is the removal of the uncertainty, right? Now we know the administration is looking at Section 122, Section 301, and that removes another layer of uncertainty.
Is there any inflation concerns? And I know we're still kind of trying to look forward towards a future that we really don't know. But given all of the back and forth we saw over the last couple of days with these reports indicating the impact of tariffs on consumers, on inflation, the administration pushing back on that narrative, is that something that the market itself should be concerned about?
And great to see you too, Romain, as well. Look, here's how we thought about tariffs, which is that they're a one-time impact. So what would be really disruptive is to have all tariffs removed and then reapplied. Mm-hmm. But to have them remain at a relatively constant level, that to us is not an additional inflation concern because we've already had that one-time impact.
So when you talk about that one-time impact, that's effectively been reflected in most of the companies' bottom lines already, and in theory reflected in stock prices.
Yes, correct.
Okay.
And that is where we have CPI now sitting at 2.4%, PCE at 2.9 or 3% for core, yes. Yeah.
So it's interesting, you know, we have this announcement and it's coming before we get a lot of earnings when it comes to some of these big retailers. And I'm curious, you know, what you will be looking for as we get into, you know, some of these micro company news cycles and what you'll be listening for specifically on the calls.
Well, the consumer, as we know, has been powering the economy, but we also know that there's very significant bifurcation within the consumer segment, with the top 10% of consumers really driving the most of the expansion of spending. And so we're looking for a couple of things, right? First of all, whether we're seeing lower income consumers continuing to spend, where are they economizing, where are they cutting back, and what's going on in the luxury segment too. And what really matters here is the rate of change, right? Where are we seeing the changes? Are we seeing people, for example, eating out less? If they are eating out less, are they buying, you know, cheaper meals, fewer bottles of wine, that kind of thing? But it very much is giving you a lens into the reality day to day of how consumers are experiencing tariffs.
All right, Sinead, I have to leave it there. Always great to catch up with you. Sinead Colton-Grant, Chief Investment Officer over at BNY Wealth, offering some interesting insights here on a day where a lot of people are concerned about what comes next. When we talk about that Supreme Court ruling, our special coverage continues with one of the lawyers that led one of the key lawsuits that led up to that Supreme Court case. The Attorney General from California also going to catch up with Nobel laureate Paul Krugman. And we're going to talk to Keith Kajiwara over at Teneo about how C-suites are going to react, if at all. All that and more coming up in a bit. This is The Close on Bloomberg. Our coverage of the Trump tariff decision continues with a closer look at the Supreme Court's majority opinion, which zeroed in on what it called a unilateral and transformative expansion of the president's authority. Writing for the plurality, Chief Justice John Roberts said, quote, that in IEEPA's half-century of existence, no president has invoked the statute to impose any tariffs, let alone tariffs of this magnitude, and that the lack of historical precedent, coupled with the breadth of authority that the president claimed, suggested that the tariffs extended beyond his legitimate reach. That issue, a core part of the 3 lawsuits that led to this case, including the lawsuit pressed by 12 Democratic state attorneys general, including from California's Rob Bonta. He joins us right now to talk a little bit more about this decision. All right, first, what was your initial reaction at 10 a.m. Eastern time, that is, when you heard about the decision?
Not surprising. What I expected, having been in the courtroom at the U.S. Supreme Court for the oral argument, and very affirming. And most of all, I feel that it's an important amount of relief that's being delivered for the American people, including Californians, for consumers who are paying higher prices, for workers who've lost their jobs, for businesses, including small mom and pops who have struggled. Some have shuttered their businesses, never to open again. So this is important relief delivered to them. And it calls out Trump's unlawfulness for what it is. He literally acted illegally to raise prices for the American people after saying that he was going to lower prices on day one. It was a lie, his statement, and it was improper and inappropriate what he has done. He owes many businesses a refund and needs to pay up.
Well, I'm curious about that. I mean, your governor, the California governor, Gavin Newsom, has already weighed in on the $170+ billion that have been collected from consumers and companies. Do you think there's any real legitimate chance that those companies, those consumers, are actually going to see a refund of any portion of that?
Absolutely.
You do.
And the opinion could have said that we are making a decision that is prospective only, that going forward, Trump can no longer use these unlawful tariffs. They didn't say that, which makes it very clear that retrospective relief is on the table. And there's a pathway to do this. You go to the Court of International Trade if you're a business, an importer that had to pay the unlawful tariffs, and you seek a refund through what's called the refund action. And typically, generally, and it would be fair and just here, if your money is unlawfully withheld from you, if you had to pay something based on an unlawful tariff, you should get interest on it. So I think you're going to see a lot of refund actions being brought against the Trump administration for these unlawful tariffs that have been struck down.
Well, is that something that California as a state plans to do? I mean, as we go through this process, when it comes to demanding refunds, I mean, is that action that California would take?
It's very, very potentially, yes. We had a case in the Northern District of California that we are now will be transferred to or commenced in the Court of International Trade, which the U.S. Supreme Court today said is the appropriate court, and that's where we could seek a refund action for California, for the state of California, not the businesses, not the who paid the unlawful tariffs. So to the extent that California has been hurt by these tariffs, had to pay higher prices because of these tariffs, yes, we could pursue a refund action in the Court of International Trade. And we're discussing all of our options now.
Well, we will certainly keep an eye out there for any action. I do want to ask about the statement that you issued following the Supreme Court decision. You wrote that the Trump administration's illegal and chaotic tariff regime has come to an end. Of course, in the hours since, we've heard from the president directly saying that, he still plans to pursue tariffs. It's just IEEPA that was ruled against here today. And with that in mind, I mean, how do you see this evolving? You think about all the different sections that he can tap. It seems like when it comes to the tariff regime, it's actually far from over.
I think he'll try again. And some of his statements today were very remarkable, almost claiming victory in the face of very clear defeat. I mean, this is an embarrassing loss in front of the U.S. Supreme Court on his, key policy proposal of his administration. It was unlawful, and it was not even close. It was clearly unlawful, a 6-3 loss in front of the U.S. Supreme Court. And he very may well try to implement other tariffs through other pathways. Those were always available to him. To be clear, there's prerequisites for those tariffs to be implemented. There's limits on those tariffs. There's limits in duration and amount. So we'll see what he does, and we'll assess. We've brought 58 lawsuits in less than 58 weeks against the Trump administration for repeated illegal conduct. And so we will assess whether any of his actions going forward in the tariff space are lawful or not. And if he breaks the law again and hurts California again, we'll take him to court.
Well, I'm just sorry, just real quickly, though, Rob. I mean, looking at the dissenting opinions, and particularly the Kavanaugh opinion, who explicitly, in his words, said the president did have the authority, does that become the basis for the Trump administration to move forward with something even under the construct of IEEPA?
Well, IEEPA's off the table. So he can no longer use IEEPA to impose tariffs. He tried, he lost. The IEEPA doesn't mention the word tariffs. It's never been used in nearly 50 years of its existence to impose tariffs. But yeah, the Kavanaugh dissent did sort of set forth a blueprint that Trump might want to pursue in terms of other statutes that do provide the opportunity for him potentially to implement tariffs. But the point I was making, and the majority makes this too, is that those other statutes don't give full discretion to implement and impose all the tariffs that he tried to impose under IEEPA. And he tried to impose tariffs against every single one of our trade partners under IEEPA. Yeah. Those other statutes have limits. They have prerequisites. They have limits in duration, limits in amount. So he may take action using those other statutes, but he will be limited.
All right, have to leave it there. Really appreciate your time. That is California Attorney General Rob Bonta. Meanwhile, our coverage of the Supreme Court's tariff strike down continues with Yale's Gautam Mukunda, Teneo's Kevin Kajiwara, and Nobel laureate Paul Krugman standing by to share their reactions. We'll discuss how U.S. corporations are positioned for the blowback when we return. This is The Close on Bloomberg. U.S. corporations still digesting the Supreme Court's decision to strike down President Trump's IEEPA tariffs. Though it's unclear which importers may be entitled to refunds, we know that those refunds could total up to $170 billion. That is more than half the total revenue windfall that the tariffs have raked in for the U.S. thus far. Let's bring in Gautam Mukunda. He is lecturer of management practice at the Yale School of Management and a Bloomberg opinion contributor. Gautam, great to have you with us on Today of All Days. So you write that this ruling will just intensify the chaos. And let's talk about that chaos in the context of this refund fight, which it looks like, I mean, this could be years in the making.
Yeah, it is, and there's going to be people the speculators, including there's some arguments. Secretary Lutnick's family who have bought the rights to claim these refunds at a discount. It's essentially going to be a full employment law for corporate lawyers for the next few years, and who knows when it will be resolved.
All right, Gautam, the lawyers always win. I think we always know that.
Always.
But in all seriousness, it gets to this idea as well as to whether there is some sense of stability in this. We were talking with somebody before. You kind of talked about the idea that the impact of tariffs, certainly on corporate bottom lines, are to a certain degree a one-off. And so as long as Trump doesn't impose anything additionally on top of that, is there, at least for market participants, some visibility to continue to move forward?
So the first order answer to that is yes, but it gets more complicated when you take the second order, right? So in the first order, okay, those tariffs are going away. He announced the imposition of some new ones. There are these additional tariffs, but they have a 150-day time limit. And these new tariffs are particularly striking, right? Because they obviate all of the arguments that have been made in favor of Trump's tariffs in the first place. Mm-hmm. No one is going to build new factories in the United States because of 150-day tariffs, right? So essentially, these are now tariffs for the sake of tariffs. There's nothing else that they've been imposed. Okay, fine. We'll move forward with that. And that might give you some level of stability. The problem here is what happens next when Trump reacts to this extraordinary rebuke by, including of the 3 members of the Supreme Court that he appointed, 2 of those 3 voted against him. And when you saw his statement today, this was not like the presidential statement of a calm person, right? He accused the Supreme Court of being traitorous and into the control of foreign powers. Even if you get tariff stability, that suggests that other forms of instability are going to get worse, not better.
Yeah, and certainly the president had some strong words for those justices that fell into that 6 versus 3 camps on the 6 side. I do want to talk about how this spins into the midterm elections, which are quickly approaching in November here. You think about these tariffs, and particularly the tariffs that he was imposing under the IEEPA law here, was a key pillar of his trade policy, but also his economic policy. How do you think that this sets up the Republican Party in the coming months?
So my first read until he imposed new tariffs was that this was going to help him because the tariffs are really unpopular and sort of this might help with inflation problems, things like that. That there's that you might actually say that the Supreme Court was kind of trying to save him from himself. But I think this new set of tariffs that he just imposed are actually going to make things worse because they're going to trigger congressional review, which is going to happen 150 days from now, right up in the lead up to the elections. So he's essentially forcing Republican congressmen and senators to take strong stands in favor of his tariffs right before they have to face the voters. If I were one of them, I would really, really hate to be put in that situation, and it's what just happened.
All right, well, maybe we'll see some more folks drop out. Gautam has to leave it there. Gautam Mukunda is a lecturer of management practice over at the Yale School of Management, also a contributor for us here at Bloomberg Opinion. We keep the conversation going and diving deeper into how businesses may try and mitigate the impact of all of this trade volatility. Kevin Kajiwara is co-president of Political Risk Advisory at Teneo, where he advises Fortune 100 CEOs and key institutional investors on geopolitical risk. Is your phone already ringing off the hook today?
Started early this morning. Yeah, absolutely.
Give me a sense here, though, because there has been this discussion that at least kind of the worst of the tariffs have already sort of funneled through corporate income statements and balance sheets to a certain extent. The idea that they may not like them, but they know what they are, and even with the uncertainty potentially being raised today, is anyone really under the assumption that we could see additional tariffs on what's already been levied?
Well, look, I mean, I think you're absolutely right. I think if anybody who listened to the Supreme Court arguments, Romaine, you know, even the split in the decision today was something that was pretty anticipated. So most companies, I think, were prepared for this outcome. I think that there was some concern a few weeks ago when there were some dates that the Supreme Court could have ruled, and they passed on it. About what was happening. Was there a bigger argument going on? And clearly, the issue of the fact that they've punted back to the lower courts the decision on the refunds, and that is going to continue to be out there for some time, does render this uncertainty. However, you know, I do think that the president, in his remarks today, clearly was unhappy with this decision, and clearly, to the point that Gautam just made, is doubling down in a way. Now, all of these other authorities that he has got, you know, have different limitations on them. There have to be investigations in some cases. In some cases, they can only be applied for limited duration or a limited rate and against sectors as opposed to entire countries. So there is still uncertainty about that out there. And of course, these 232 and 301 type investigations could be launched again against new industries.
But also to pick up where Gautam left off on the midterm question, and we have no idea how it's going to shake out in November, but there is a lot of speculation that the House, maybe even the Senate, could flip back into Democratic control. Does that become a factor that you yourself then go back to these corporations as a way of sort of assessing what could happen? Because if the congressional authority does shift to the opposing party, I would assume that would at least blunt potentially some of the legal maneuvers that Trump makes.
Yeah, but I do think that, you know, Romaine, at the end of the day, the election and, you know, what's going to impact the outcome of it and what the implications of that will be are a lot more complex than the tariff issue. I mean, as we have seen, you know, with regards to affordability, that's related to the tariff issue, of course. But, you know, we saw the GDP print this morning, also that inflation, the Fed's PCE essentially coming in above expectations. I mean, it's still a very, very complex picture out there, especially with this kind of muddled employment situation as well. So I do think that companies are looking at it in a more holistic way than just on the trade front, to be sure.
Well, I'm curious, you know, for the companies who have raised prices to sort of deal with these tariffs, and it seems like the vast majority of companies have actually sort of eaten it themselves, but for those who have, you know, turned to pricing to help mitigate some of the impact on their margins, I mean, do you see those prices coming down? I mean, how do you think that C-suites will sort of deal with these tariffs now being peeled off?
Well, I think that for one thing, you know, last week, the Federal Reserve of New York issued its report, right, which famously said that 90% of the tariff cost is being borne by U.S. companies and or consumers. It didn't really specify what that split was. And I think a lot of companies definitely tried to absorb that, taking the margin hit so as to not lose market share or the like. But to the point of there's this kind of one-off adjustment, but it's going to then persist, then I think that may have to then filter into the end user consumer. We are also going through a period, of course, through the end of last year and early this year, where a lot of contracts with suppliers overseas were being renegotiated. So, of course, they were trying to put pricing pressure on the exporters and shift that balance a little bit. So, yeah, I think that mix is going to be in shift as this continues to play out.
And I'd love to talk about the geopolitical element as well, because in addition to, of course, the Supreme Court ruling, there's also concerns that the U.S. might actually take action in Iran this weekend. Certainly, the president has said that he hasn't ruled out a limited strike. And you think about, what is more directly under his control now that, of course, the IEEPA tariffs have been ruled against. I mean, could you see sort of the geopolitics of it all becoming more intensified from here?
Well, to be sure, I think we've got to be very concerned about the Iran thing playing out here in the near term, right? I mean, there is a considerable amount of firepower that has now been put into the region and is on station. It can't stay at that high alert for forever. And of course, we've got the State of the Union coming up on Tuesday as well. So, yeah, I would be certainly prepared for this to happen. President has said about 10 days or what have you, but it could certainly happen before that.
Yeah, that State of the Union just days away. It certainly will be interesting. Kevin, it's great to see you on this Friday. Katie. That is Kevin Kajiwara. He is co-president of Political Risk Advisory over at Teneo.
One of the great things about this State of the Union
Tell
address,
me.
You know how he walks down the aisle and you have all the Supreme Court justices sitting in that front row and he shakes their hands? I think there's 6 people on there. Well, 3 of them he wasn't going to shake their hands anyway, but there's a couple on there that you kind of wonder what the interaction is going to be like. So,
a lot of palace intrigue. It'll certainly be interesting from many different levels here. But still ahead on The Close, Nobel Prize-winning economist Paul Krugman. He joins us next to react to the tariff ruling, also gauge its impact on U.S. GDP. That and more when we return. This is The Close on Bloomberg. Well, as we've been discussing, of course, the Supreme Court's ruling against those IEEPA tariffs has thrown into question what that is going to mean for some of the tariff revenue that that the U.S. government has already collected. As you can see there, IEEPA really accounts for the majority of the trade remedy revenue that the U.S. is raking in. That's estimated to be at about $260 billion. So let's discuss with Nobel laureate in economics, Paul Krugman. He is research professor of economics at the City University of New York's Graduate Center. Paul, it's great to have you with us. So let's talk about that, because as we know, when it comes to the tariff revenue, that was an important pillar of the economic agenda of this administration. If you take out the lion's share of that revenue in the form of these IEEPA tariffs, where does that leave that agenda?
Well, I don't actually think the revenue was a key part of the agenda. I think it was part of the case that the Trump administration made for the tariffs, but I don't think it was really their motivation. That said, okay, we're looking, I believe, now at losing revenue that's around 0.6% of GDP, which is something like 1/10 of the budget deficit. So the budget deficit gets about 10% bigger as a result of this ruling, unless, in many ways, the other stuff that Trump was saying he's going to do is not, from his point of view, a good substitute for IEEPA. But it could replace a good part of the revenue. I actually think that's all really pretty secondary. But that's, in some ways, the revenue is the least of the issues.
Well, in your view, then, what is the big issue here? I mean, obviously, there's a myriad that we could name, but what comes to mind to you as most urgent?
Well, the reason that Trump went with IEEPA, when he was warned that it might not hold up in court, right? There was a big risk. Everybody understood of what just happening. And the reason he went with that, as opposed to other more conventional trade, tariffs, aside from the fact that he needed something that didn't have to pass Congress, because Congress wouldn't have approved his tariffs. But the point about, what does IEEPA say about the conditions under which you can impose tariffs? And the answer is it says nothing. The legislation doesn't even mention tariffs. And because it was so, not really about tariffs, Trump took it as a license to impose tariffs whenever he felt like it. He used it as a license to impose tariffs on Brazil because they convicted Jair Bolsonaro. He took it as a license to threaten Europe with tariffs because they sent troops to Greenland. And the other things that are out there, which might be able to replace the revenue, will not give him the same amount of discretion. And of course, that also implies, trade deals. Yeah. All of the trade deals that were made on the basis of, we will scale back the IEEPA tariffs that we imposed on you if you give us the following things, are now null and void because he doesn't have that discretion anymore.
Well, I am curious, Paul, though. I don't know if you had a chance to actually see the press conference that Trump had a couple hours ago in response to the ruling. And just not so much what he said, but also some of the emotion behind it. But after he spoke, we saw several administration officials on various social media platforms talk about the alternatives in their view that they could use to not only keep these tariffs in place in some form or another, but to actually maybe increase them as a way for the president to get the leverage that, in his view, he needs to get the things he wants done.
Yeah, well, look at what he just said with the Section 122 tariffs, which is, that's a very, I never thought anybody would invoke that. It's really kind of a Bretton Woods era thinking. It's actually post, but anyway, but it's a flat 10% tariff on everything. Mm-hmm. That's very, very different from saying, I'm doing 50% on Brazil because I don't like what they're doing domestically. It's very different from saying, I'm going to go after France, Germany, and the UK because I don't like what they're doing in Greenland. So although it may be able to replace the revenue, he may be able to collect enough money from these other tariffs that the revenue hole is filled, although I don't think that exonerates him from having to refund the money already collected. Yeah. But he may be able to replace the revenue, but he doesn't regain the flexibility.
Forgive me for being pedantic, but did this really plug a revenue hole, or am I missing something? We saw the deficit
it's some revenue. It's a tax.
A tax on who?
The Trump tariffs in general.
Do you know how many tariffs I've paid? If I order something overseas, I get a message from FedEx or DHL or something else. I mean, that's not coming out of the pockets of people overseas.
Well, no, it's not. This is a sales tax. I mean, a tariff is in the end a sales tax. There's a lot of moving parts in the way that works out, but it's in the end. And so this was the Trump tariffs are about, in total, the tariff increase is around 0.9% of GDP.
Okay, but if that's coming out of the pockets of the American people, does not potentially have a drag on economic activity, even if it does benefit the actual government coffers itself? I mean, I am the government to a certain extent. You are. We all are.
Yeah. No, that's right. It's a little bit, and if you do actually kind of work it through, but because it's a tax hike, the tariffs are slightly contractionary, maybe more than slightly. That's one of those things where you have to ask what else is going on. But how does this affect the Fed? I mean, if the tariffs weren't there, the Fed would probably have lowered rates already, and so on. But it is a significant increase in the cost of living, not a gigantic increase in the cost of living, but everybody's cost of living is somewhat higher because of these tariffs. Mm-hmm. And that will go away, but these other tariffs would also be a tax on the American people. Right.
Well, Paul, we only have about a minute left, but you said that will go away in reference to the cost of living. And I want to ask you about your confidence there, because when a company, raises prices, they tend to be sticky. Do you have confidence that, some of the corporations that have raised prices in response to tariffs actually will lower them?
Well, that's always a question. But, we have ongoing inflation running at about 3% a year. So all that has to happen is for companies not to raise prices as much as they would have. So all of this plays out a little bit over the course of, let's say, a year. So I don't have much doubt that we will, in fact. But of course, if this is a net reduction in tariffs, because Trump is basically proposing a new set of tariffs to make up for the loss of the old ones. So any consumer relief may be very short-lived here.
All right, Paul, always appreciate your insights. Paul Krugman over at CUNY's Graduate Center and, of course, Nobel laureate in economics. When we come back, we turn back to the market reaction. Stocks still in the green pretty much across the board, with the S&P up 0.7%, the NASDAQ up almost 0.9. A conversation up ahead with Berkeley Belknap over at Franklin Templeton. Just about 10 minutes away from the closing bells, Romaine Bostic here alongside Katie Greifeld. A somewhat volatile market here on the day as I think folks trying to digest, obviously, the Supreme Court ruling. Though we should point out, a lot of the market reaction today was like more tied to the economic data we got earlier this morning.
Yeah, really interesting day. You did see some knee-jerk volatility right at 10 a.m., but at least in the equity market, you have a clear direction of travel. The S&P 500 higher by about 0.6%. You take a look at the bond market, you could easily think nothing happened on this Friday. It was a snooze fest. And we know that's not the case.
Yes.
And then you take a look at crude, and it's kind of the same story.
Yeah, and I wonder how this kind of feeds into next week, because we are going to start to get some earnings out of the retailers, which actually are affected not only, of course, by the tariffs, but when we talk about the economic data we got this morning, that provides another read. And then, of course, there's this whole idea of the president making his big State of the Union speech, where I assume he's going to lay out, in theory, some policy proposals for the rest of the year that might carry over into the midterm elections. So.
Absolutely. I will say I am really excited for retail earnings.
Yeah.
I am off next week. But, sad to miss those retail earnings because a lot of those retailers are a member of the thousands of companies that have sued the government asking for refunds. We know that's going to be a drawn-out process, but the commentary should be interesting.
Yeah. Now, it's interesting to say that despite the fact of all the volatility we've seen in stocks, the major indices are still holding not far from some of their recent all-time highs. Some big questions, though, as to whether this market can move higher or whether we're setting up here for a potential pullback of more significance. Berkeley Belknap joins us right now, head of U.S. Portfolio Management for Franklin Templeton Investment Solutions. And Berkeley, I first want to start off with what clients have been asking you as of late, not so much just today with regards to the tariffs and stuff, but with a lot of the sort of the movements that have been going on, whether it's in politics, geopolitics, or in the market itself. Are people bullish? Are they cautious? Are they comfortable? What?
I think there's really different views across the board, but from our perspective, we see incredible strength in the macro backdrop, and that really remains supportive. A lot of questions have been coming to us around earnings and earnings growth, and can U.S. earnings continue to deliver? And we've seen really another great quarter. We've had 6 consecutive quarters of earnings growth, and we expect megatech to continue delivering north of 20% earnings growth, and the broader market producing double-digit gains. So what we point to when we get asked those questions are our macro dashboard, our view of number of high-level set of directional indicators, and they show strength across the board with truly some of the best aggregate readings in roughly 4 years, and that's really globally, not just in the U.S., but really across the whole world.
Well, when we take a look at some of those numbers, obviously we got the read on GDP for the most recent quarter, obviously hurt a little bit by the government shutdown, but we did see personal spending continue at pace. Some concern here about inflation potentially rearing its head, but none of these numbers are in any sort of way extreme. From an investment perspective, Berkeley, is this still a story about big cap tech? Is there a story to be made about a rotation into more cyclical names? Where is that investment thesis right now?
We're really in the middle of a clear regime shift in the markets. So the defining theme this year is not AI dominance. It's really that of rotation and broadening. So leadership has expanded beyond megatech. We're seeing strength in energy, cyclicals, value stocks, small caps, and international equities. And part of the international equities is driven by dollar weakness. But when we look across the board, if you look at the Russell 1000 growth, it's down over 4% for the year, up to the year to date, and value is up over 6%. So that's more of a 10% divergence to value growth just in the month and a half that we've had. And if you look at just the S&P 500, which is up less than 1% year to date, if you look at the equal weighted index, it's up 6%. So just both are arguments for a shift from megatech and a shift from growth to more broadening across all the equity indices.
Well, Berkeley, let's shift from equities to the fixed income markets, because this line in your notes really catches my attention, basically making the case that the long end of the Treasury curve right now looks pretty vulnerable. You're right that actually it remains structurally pressured, and I'd love to walk through that, because we know that there hasn't been a lot of love for duration from investors for quite a few years now. But then you think about a confluence of forces coming in. You think among them, we have a new Fed chair coming in as well, who doesn't seem as open to, communication and signaling the market where they're going to go as maybe past leadership members at the Fed. I wonder how all of that wraps together and impacts the Treasury curve.
There are a lot of points there. So I'll start on how the curve may be pressured, and then we can move on to Warsh and his position. So we do see that long end being pressured. Now, we do expect the Fed to cut this year. I think that the expectation is about 2.3 Fed cuts. We think it's at 2 at most. And, in the past, duration has really been a great way to hedge some of the Treasury risk. But right now, we think it makes more sense to be short duration because we think there's pressure on the long end of the Treasury curve. And that has to do with a few factors. One is huge amount of Treasury issuance, so more supply than demand. That could mean rates go up in the future. But also this massive AI-driven CapEx financing from hyperscalers and a lot of bond issuances. So that really means that globally, there's a competition for global capital. So there may not be as much demand for these long-dated treasuries. Along with that, you've got Kevin Warsh coming into the Fed.
Right.
Now, historically, he's emphasized inflation credibility, but he was also picked by Trump because he's expressed an openness to cutting rates. So there's a lack of understanding where we're going to be going. But to your point about his thoughts on openness and guidance, he has indicated that the Fed may step back from the detailed signaling they've done in the past. So potentially fewer dot plots, less explicit path guidance. And that can really lead to more uncertainty. And markets would then have to infer policy direction more directly from data, which typically means higher rate volatility, larger swings when we get CPI and job reports, and then a structurally higher volatility premium in treasuries and in the U.S. dollar.
Berkeley, always a pleasure. Berkeley Belknap, have a wonderful weekend. Head of U.S. Portfolio Management for Franklin Templeton Investment Solutions. Katie, as we count you down to the closing bells here on this Friday afternoon.
And I know we're very focused, of course, on the U.S. Supreme Court ruling against the IEEPA tariffs, but really interesting point by Berkeley that you think about the competition for fixed income dollars. You think about all of the mega issuance coming from those hyperscalers with very, very high ratings. That might look a little bit more attractive than the long end of the Treasury curve in this environment. It's going to be fascinating to see how that plays out.
And I'll add to that by saying, too, there's also a lot looking attractive outside of the U.S., whether you're looking at sovereign debt or even foreign corporate debt. That's also so a lot more competition. I guess that's great if you're an investor, but it raises a lot of questions here as to where things go next. The S&P 500 right now holding at around 6907 and change as we move closer to those closing bells. A full breakdown of all of today's action and a push ahead to next week starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Masser and Emily Grafeo join us now. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube here on a big day, at least if you're into the Supreme Court, which I'm told is hot these days, Carol Masser. A big Supreme Court ruling against those Liberation Day tariffs. The market reaction relatively muted, at least indirect reaction to it.
Yeah, I'm kind of glad you went there. We talked with our own Eric Weiner, who tracks the markets for us here at Bloomberg, and he said the same thing. He felt like the market's stuck. He expected kind of more upside to equities coming off of that, and to him, it just speaks that there's just a lot of questions still out there, and investors just uncertainty over many things, and so not necessarily going all in on this.
Yeah, you can see that in what is actually up in the equity market and what's down. The Russell 2000, those economically sensitive stocks, that's actually finishing the day in the red, Katie.
Yeah, it's interesting. I mean, you take a look at a stock like Nike actually finishing in the red, lower by about 0.2%, as Romaine Bostick, sitting next to me, knows well. Nike is very, very exposed to tariffs. And initially they spiked, finishing, though, as I mentioned, in the red. There's still obviously a lot of outstanding questions.
Yeah, I was going through this whole worksheet of like all the companies that are, have the biggest exposure to tariffs and to foreign sales. Obviously, you have automakers, you have, industrial companies like Caterpillar, obviously apparel companies like Nike and Lululemon. And when you look at the market reaction in most of them today, I think you get the sense that for a lot of investors, they feel like the worst had already been priced in. We get the closing bells here on this Friday. Remember, this was a shortened week here in the U.S. because of the President's Day holiday on Monday, so 4 straight straight days. And the net result is we're going to end in the green on the day, and it appears for the week as well. The Dow Jones Industrial Average is going to end out the day up by about 0.5%. The S&P 500 closing right around 69.09 and change, higher by about 48 points or 0.7%. The NASDAQ Composite adding 200 points or 0.9%. But the Russell 2000 getting left behind. It's going to drop by about 1 point. We'll call it unchanged on the day, but it is going to have red on the screen.
All right, so a little lower when it comes to those small caps. Back to the big caps I go, looking at the S&P 500, 334 names in that index actually higher today, Katie, 169 to the downside.
And you can see that that positive breath when you take a look at the sectors as measured by the circle. Look at all the green on the screen. In fact, your biggest gainer from a percentage basis was communication services today, higher by about 2.7%. A lot of that being driven by Alphabet. Consumer discretionary, though, real estate also leading gains here. In terms of what didn't quite perform, there's only two sectors that finished in the red today. Energy down about 0.7%. Going to be very important to keep an eye on that, and of course on the energy markets as we watch the geopolitical situation over the weekend, and also healthcare down about 0.3%.
Yeah, that energy trade interesting, and feeling like some of the tensions may be backing off, which is surprising considering some of the headlines. All right, let's go to some of the individual gainers, if I may, and it's FIX, FIX is the ticker, Comfort Systems, number one gainer in the S&P 500, hitting an all-time high today, at least intraday. That stock up about 6.5% here in the session. It provides heating, ventilation, air conditioning system, installation, all that good stuff. Firm reported revenue for the fourth quarter that beat the average analyst estimate. Keep in mind, this is a stock that has been on a tear this year. It's up about 60%, so some more momentum to the upside in today's trade. Flip it on over to General Electric, finishing just off its best levels of the session. It too hit an all-time high in the session today, finishing the day with a gain of about 2.5%. Morgan Stanley initiating with a recommendation of overweight, citing the engine manufacturer's durable services growth, strong pricing power, and pristine balance sheet. The analyst there says Wall Street underestimates, long-term free cash flow with further upside from earnings revisions and multiple expansion. They set a price target of $425 a share, stock closing at $343 and change. So some upside certainly on that one. Stock is up about 11% year to date. And then the number one gainer in the NASDAQ 100, we're talking about Alphabet, up about 4% here. And this one of the things that kind of stood out for me was a Wall Street Journal story that says that Google is exploring new ways to expand the market for its AI chips to better compete with NVIDIA. So the company increasing its financial support to a network of data center partners, including a potential $100 million investment in cloud computing startup FluidStack. But I think it's interesting as we get ready for NVIDIA's results.
Yeah, right? NVIDIA results was that next Wednesday, right? The 25th.
So. Yeah.
We'll have full coverage right on here on the close.
Yeah.
All right. Well, before then, let's take a look at the decliners. Blue Owl shares down 4%, down 10.4% on the week. Now, on Thursday, the alternative asset manager restricted withdrawals from one of its retail-focused private credit funds. So that alone sparking some fears here about just how much liquidity there is in this asset class. Of course, there's been a lot of scrutiny in recent weeks on private credit. Bloomberg also reporting last night that Blue Owl did find 4 buyers for a $1.4 billion portfolio of loans to help pay out investors. But the decline, the trade today really reflecting those broader fears that investors are having about illiquidity in private credit and potential losses. I do want to go to Walmart, though. We were talking just a few minutes ago about how a lot of these commerce, consumer-focused companies not moving much on the tariff news. I think Walmart is a good example. The stock in the red, but only down 1.5%. They did cut, they got a recommendation cut over at HSBC. The analyst there cutting the retailer to hold and saying that the company's fourth quarter results the other day were solid, but the outlook for 2026 is surprisingly weak given solid trends. Nevertheless, though, it wasn't a big move downward in Walmart, but keeping an eye on that. And then finally, CoreWeave shares down 8%. This stock did have its biggest intraday drop at one point, though, since November. It was down about 12%. Business Insider reporting that Blue Owl, yes, the same Blue Owl from just a minute ago, was unable to secure financing for a $4 billion data center project that will be occupied by CoreWeave.
Yeah.
So this speaks to a lot of the fears in the market about there's a lot of credit funding these data centers to power AI. Is this actually going to create real revenue here, or is it going to lead to losses?
Yeah, and just an honorable mention, too. I just want to point out the drop that we saw in cybersecurity stocks today, including some of the names like Zscaler, Cloudflare, CrowdStrike, down about 8% here on the back of that release of this new Anthropic tool, apparently related to security features in its Claude AI model. We do need to check yields just real quickly here. Of course, higher on the day and higher on the week. The entire curve shifting up here. Your 2-year yield up about 2 basis points. Keep an eye on that, 3.5%, as we're just about 4 weeks away from the next Fed decision.
Yeah, I think it's fascinating that you went there, and I think it's important because I think going into Friday, we all thought we were going to be talking about the inflation print and the economic data this morning, the hot inflation print, weaker growth, but it certainly shifted to that U.S. Supreme Court ruling against the president's, what is a key part of his platform. I guess at this point, Katie, it now goes to what comes next from the president, the workaround that maybe he gets to do so that he can continue to impose tariffs. But I guess we have to wait and see here.
Right, yeah, a conversation that Romaine and I have been having on the close is what this means for the 2026 midterms. It's going to be really interesting. There was a great column from our own Sean Donnan about basically that this is secretly a gift to Trump. I don't know if many others would go as far, but he does point out that you take a look at the polling. A lot of the Americans polled weren't approving of how he was handling the economy. So from that sense, if he does have to retool, if this does help in terms of some of the affordability measures, that maybe that will be reflected in November.
Well, I am curious how it's going to be reflected in a State of the Union speech, like how this gets spun, because when I saw the press conference, I thought we were going to get more of that pitch, although, it was more just emotion and grievance. But obviously, he's got some time to refine that message, a message that presumably will actually be written by his speechwriters.
And all the while, equity investors are just piling into stocks. The VIX is lower. So it does seem like, at least for the market right
I'm sorry,
now.
what did you do with Tim Stenovic? Why is he off?
Who allowed that?
I forgot about him for a second there. Did you get rid of him finally, Carol?
No, I would never get rid of him.
Oh, okay.
He's too good to get rid of.
Man.
I'll also
Maybe he
be
knew
here
something
on Monday.
Other people on... No, I'm just kidding. I'm just kidding.
Wow.
Are you guys ready for the snow this weekend?
What snow?
There's a snowstorm coming.
There is.
A nor'easter.
Storm. You New Yorkers are just so...
JFK Airport might get up to 10 inches.
10 inches?
That's too many. It's too many.
My.
I'm getting out of here. I won't be here all of next week. I am psyched. I'm going to Colorado, though, so I'm chasing more snow, even though it's been snowing more on the East Coast than it is out west.
All right, kiddo, we'll safe
Never on
travels.
vacation, Katie. If there's another decision, I'm calling you.
No, please
2 in the
don't.
morning.
I'll
How do you
throw the
feel
phone.
about the midterm elections, Katie Griffin?
Let me tell you.
She's not going to answer. She will not take your call. All right, have a good, safe trip. Everybody have a great weekend and look forward to talking on Monday. That'll do it. Our cross-platform, we call it the closing bell. Katie and Romaine continuing on the close on TV, and Emily and I, of course, continuing on Bloomberg Business Week Daily right here on Bloomberg Radio. We will see you again, same time, same place, except for Katie on Monday.
All right. Well, all the news today is not necessarily about tariffs. Big tech is still in the news. It's going to be in the news even more next week with NVIDIA's earnings. But when we come back, we're going to talk a lot about that AI risk, how it is more tangible than ever, and how the world needs to be prepared. That's according to AI entrepreneur and investor Matt Shumer, a viral essay that took the world by storm just a few days ago. He joins us on The Close, coming up next, right here on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Katie Greifeld.
And I'm Romaine Bostic. Another somewhat volatile day on Wall Street, but the net effect of it was a move to the upside on the day and on this holiday shortened week. 69.09 on the S&P 500, holding not far off that record high, up about 0.7% here on the day. No real material impact from that Supreme Court tariff decision. In fact, a lot of the moves you saw in the market today were more tied to the economic data that we got before the market opened. Though keep an eye on what's been going on in the commodity space. Gold back above 5,000 an ounce, silver rallying 7% here on the day. The entire yield curve shifting higher. And when it does come to the tariffs, we did see some movement there, but surprisingly, movements to the upside. You take a look at this main index here, the S&P 1500, which tracks the apparel companies, at least as a group, Katie Greifeld, they were up on the day.
Well, I found one name that didn't actually move higher on the day, and that is Nike. Really interesting to track the reaction function in Nike shares. Initially popping on the news at 10 a.m., but you can see finishing lower by about 0.3%. Then you take a look at Akamai. This is an earnings story. We'll be talking actually to the CEO in a few minutes' time. One of the biggest losers in the S&P 500, falling about 14% here. And then I threw Corning on the board as well, higher by about 7% or so. One of the biggest gainers in the S&P 500. But let's talk about our top story this hour. That is tariffs and the tech trade. Today's tariff ruling taking stocks on a roller coaster ride, and the tech sector was no exception. Barely squeaking out a gain, and you had cyber stocks in particular getting crushed in the final hours of the trading day in the wake of Anthropic unveiling a new security feature into its Claude AI model. Now, the drop by cybersecurity stocks is just the latest example of software shares souring over concerns about competition from AI native companies. Certainly remain the AI scare trade has been one of the defining features of markets over the past several weeks.
Yeah, and when we talk about the scare trade here, our next guest actually writes it. If we get AI right, the upside is, quote, staggering, but if we get it wrong, the downside is equally real. That's the message from AI entrepreneur and investor Matt Shumer, whose viral essay this month lays out the risk and possibilities coming out of the world's most advanced AI models. Pleased to say that Matt Shumer joins us right now here in Studio 2. Great to have you here.
Thank you for having me.
Give me a sense here, because, you know, we started this whole AI conversation, at least publicly, maybe about 3 or 4 years ago, and it was kind of an extreme. Either it was going to save us all or it was going to kill us all. We're now getting to this stage of the cycle where we're starting to talk a little bit more about the nuances. Are we getting those nuances right?
I don't think the right conversations are being had yet, and I think you're right to think about the nuances. It's not going to be wholly good or wholly bad. I think a lot of people are very much in one of those two camps, but the reality is much more complex. Even if this goes incredibly well and we have cures for cancer, as a lot of these CEOs talk about, there will still be mass job displacement, right? Even if it goes poorly, there will still be good things that come of it. I think it's so nuanced and so detailed, and as I've been saying, it means something different for every single person. Everybody has to think about what this means for their lives.
When we talk about thinking about what it means for our lives, and I want to talk more about broadly about what it means for the economy, so more on an aggregate basis here, have you heard from folks, or have you read folks or spoken to folks where you do think they've gotten the message right, or at least that they're asking the right questions? And if so, what are those questions?
Yeah, absolutely. I originally wrote this essay for my parents, specifically my dad, yes. Yeah. And I did not think that it would go, I mean, orders of magnitude close to where it has gone, right? The craziest thing that's come out of all of this, among other things, is that I'm receiving hundreds of messages every hour, and it's been hard to keep up with, of people saying, wow, I did not believe this was a thing a week ago. I read your essay. Now I went and tried this for X, Y, and Z in my life, and I am seeing what you're saying. I can now do these things that I never thought I could do. I can start this business that I never thought I could start. It's opening up possibilities for people. At the same time, there are these negative side effects and these things that I think we are really right to be thinking about, and more people need to be talking about. So to your original question before, there's positives, there's negatives. It is going to be one of the most complex and most important topics of the next few years and beyond.
Well, Matt, let's talk a little bit more about the discourse that this sparked, because the reaction on social media, I spent too much time on X, but I mean, it was fierce. It was really intense on both sides. And one of the more cynical takes was that, okay, you work in AI. One of your recommendations is to sign up $20 a month for one of the paid versions of Claude or ChatGPT. So again, a cynical take here that, you know, the answer is just to use AI more. I mean, what does that sort of response reveal to you about how people are just feeling about the concept in general?
I think people are looking for any way to dig their heels in and say that this is not happening. If you look at my article, I had many opportunities to plug my own companies, the things I've invested in. In fact, I did none of that. I actually focused on companies that I have no stake in, have no relationship with from a monetary gain perspective. I wanted the message to be pure. I wanted the message to be, this is happening. Here's what you could do about it. Here's what you need to know about it. Not, hey, go use my thing, right? There are going to be opportunities for that. I don't want to take that because I want this message to resonate in the way that I intended, which is people need to know about it. But from what I learned, it was that people will look for any excuse to say this isn't happening, this isn't real. People are saying there isn't data. Well, this thing came out 3 weeks ago, and the data actually came out a couple hours ago and happened to align with the article, right? This is happening, and I think people need to really take it seriously.
Well, it's really interesting to me that, you wrote this with your parents in mind, because you think about people who are in the workforce mid-career, entering their careers, and it seems like there's a lot of advice you could give them about AI. But for people, later in life who have retired, I mean, why did you think that it was important? And I don't know too much about your parents' situation, but for that generation, why do you think it's important to put out an essay like this?
I think people deserve to know. Knowledge is power. Right? And most people don't know what's happening. They deserve to. Even if you're close to retirement, and my parents aren't quite there yet, but they're getting there. They want to be able to ensure that the rest of their career goes smoothly. They deserve that, right? People deserve the ability to say, hey, let me take the power into my own hands and do something about this. People my age, right? I'm 26. I think about this in the context of my own career. If things go as I expect, and I really, really hope they don't, and I want to be clear about that. I hope they don't. But if they go as I expect from everything that I've seen, I don't know what my place in the world is in 2-3 years.
But that is some of the fear. I mean, we don't have to get too deep into human psychology, but I think for pretty much most people alive today have not been through a major transformative moment like AI might be promising, where it not only will reshape the structure of our economy, how we work, how we live, and at least for right now, the narrative seems to be there will be need for fewer jobs, or fewer people in those jobs at least. And that's got to be scary, certainly for people who are mid-career, but even for those people who are young, who are entering the workforce and trying to find their place. What's the solution? Do they just all become entrepreneurs?
I don't know that I have the right solution. I don't know that anybody does. I don't think anybody in the technology working on this at a fundamental level knows what the world is going to look like in 3 years. We are not, as humans, equipped to deal with exponential change. We can predict linear change, but these models are improving in an exponential way, which means it's easy to say, hey, this is where it's going to be in 3 years, but seeing that in the real world will look entirely different.
When you say exponential way, is this like one of these situations where Moore's law is going to look cute, like 50 years from now? That was almost like
potentially.
Okay. Yeah. Now I'm scared.
I mean, there are a lot of inputs to this, and it's very complex. But we're seeing algorithmic progress. We're seeing data center buildouts. We're seeing energy buildouts. Yeah. Right. This is going to get bigger from here, and it's not that far off from being at our intelligence level. It already is in many ways, and better in some ways at this point. So a little bit of progress goes a long way at this point.
All right, Matt, really appreciate you taking the time. I know it's been a whirlwind couple of weeks for you. That is AI entrepreneur and investor Matt Shumer. Now coming up, Akamai CEO and co-founder Tom Leighton. He joins us on the heels of the enterprise software company's earnings report. He'll lay out the company's strategies for the coming months. As we were just talking about, AI disruption roils the industry. This is The Close on Bloomberg. Shares of Akamai Technologies ending the day about 14% lower after reporting earnings after the bell on Thursday. Now, the enterprise software company delivering a first quarter and full year adjusted earnings outlook that fell a bit shy of analyst estimates. I'm pleased to say that we're joined live now by Akamai CEO and co-founder Tom Leighton. And Tom, we have to start with the market reaction. And as I said, down 14%. That looks to be your worst day in about a year here. I mean, what do you think was really the key point here that the market seized upon when you take a look at your results and really at the industry broadly, which has certainly been going through a rough patch?
Yeah, our sector got hit pretty hard today, and we got hit along with it. That said, even after today's sell-off, we're up 10% for the year, which is pretty good in this market. And, the analyst reports coming out now based on our performance in the quarter and our guidance for the year are actually quite positive, with several raising their price targets on Akamai for the year by $10 or $15 or more. And, I think we have tremendous prospects led by our cloud infrastructure services. You know what Matt just said on the segment a minute ago, AI is here, and it's real. And we see it in our customer base. And our cloud infrastructure services grew at 45% in Q4, and we're guiding to 45 to 50% this year. And that's driven by our AI inference cloud, which is the distributed infrastructure to support all the AI applications and agents that our customers are embedding.
And so, I mean, why do you think that the market is missing that at this moment, that message there that, you're not going to be disrupted, you're actually harnessing AI? I mean, do you just chalk that up to macro factors, or, is there something that, would be better communicated here?
Yeah, I think there sometimes is a little confusion about AI because it means so many things to different people. And in fact, the more there's disruption of the SaaS marketplace, really the more it helps Akamai. Our security services are not disrupted by AI because they're embedded in our platform that is needed to defend enterprises. And so we're not vulnerable to that kind of disruption. Moreover, as enterprises do take more capabilities in-house with SaaS, they need to run that on an infrastructure, and our inference cloud is the perfect infrastructure.
Yeah, but is there any risk, though, Tom, that as the AI build-out continues, that we start to maybe potentially see a replacement, not like a wholesale replacement, but alternatives to that infrastructure, whether it's through some of the things Alphabet is trying to build, or whether it's obviously some of these new coding sort of scripts that we're hearing from Anthropic that can maybe do some of the security stuff on its own in a way independent of the structure?
Yeah, I think you're going to see that. But that doesn't replace the infrastructure. Our platform that's located in, 4,000 plus POPs in 700 cities, which when it comes to security, you need that kind of distributed infrastructure to stop the attacks from getting close to your data center, or you just get overwhelmed. Moreover, as those SaaS applications are developed, they got to run on something.
Well, one thing I am curious about, too, and particularly given, not just Akamai, but given your personal background, I mean, you have kind of been at the forefront of the development of cybersecurity tools and just really kind of the booming of the internet coming out of your work in the late 70s and early 80s. And I am curious if the structure of the internet as we know it today, whether there's an argument to be made that it should start to be walled off to a certain extent because of some of these security concerns.
I think the structure is going to stay there. The protocols are going to change. How we use it will change. There'll be proliferation of agents and apps driven by AI and all sorts of new capabilities, which are very exciting.
All right, Tom, always appreciate talking to you. Tom Leighton there is the CEO and co-founder over at Akamai. The shares getting dragged down along with the broader software and cybersecurity sector because of some concerns here about AI disruption. When we come back, we're going to talk about the potential for tariff disruption. Retail stocks have been making some big swings following the Supreme Court's ruling to strike down tariffs, Katie. And when we talk about this idea of sort of what's going to be affected and not, you had pointed it out on your board earlier today. We talked about as a group, a lot of these apparel stocks, footwear stocks actually rose as a group, though some of them were sort of left out in the mix. And because there's a lot of questions, these companies have huge exposure to overseas markets.
Yeah, it's going to be fascinating. I mean, Nike, case in point, which I know we're going to be focusing on specifically, actually falling a little bit on the day. I mean, as you sort through the soup of all the different sectoral tariffs out there, all the different levers that the Trump administration can still pull. I mean, thinking about the implications, certainly, it's a little bit murky here.
All right. Well, I went through a whole list here of the companies that have the largest exposure to tariffs here in the U.S., and it's no secret. It's the big apparel makers, and that includes Nike. We had a chance to catch up with the CEO of Nike just a little while ago. We're going to play some of that conversation and also catch up with the CEO of Coach. Stick around. This is The Close on Bloomberg.
We have not seen an issue with our leather suppliers, nor have we seen an issue with our manufacturers. We are making Coach product with some of the same people we've made for 20 or 30 years. We have very deep relations. Of course, tariffs is an issue, but one thing about our company that you need to bear in mind, we see in the next 3 years 70% of our growth coming from international. So when I'm selling internationally, tariffs are no longer in play.
That was Todd Kahn. He is the CEO and brand president of Coach, speaking to us earlier this week about his outlook on tariffs. And for more on the broader retail sector in the wake of the Supreme Court striking down President Trump's IEEPA tariffs, let's go to Max Kahn. He is president of Coresight Research. Max, I assume no relation to the CEO of Coach, but put this into context for us, the fact that we did see the Supreme Court take action against the IEEPA tariffs and what this means for the retail sector, because certainly looking at the market today, it was not a clean read.
Yeah, I think that's partly because there have been so many changes around tariffs. There has been a lot of uncertainty regarding where tariffs would land. There's been a lot of uncertainty regarding what would happen with the Supreme Court ruling. And I think retailers have been preparing for this. And this uncertainty for tariffs has really kind of just become a part of business as usual for them. And because of that, they've created a lot of flexibility, a lot of resilience in their supply chain so that they're able to maneuver depending on, just how things may evolve, over time. So if they need to move something into a different market, if they need to take a different approach to sourcing, they have a lot more flexibility and resiliency in their supply chains in order to do that.
I'm curious, too, about the other aspect of this ruling, the potential for a refund of, if not all, certainly some of the $170 billion plus that have already been collected. Would that have any material upside for any of these companies should it actually be returned? And if that cash did come back onto the balance sheet, how do you think they would actually spend it?
Yeah, we think that there's a lot of opportunity to leverage that into investments in technology. There's such a huge potential for AI within the retail sector as there is in most sectors. And, I think that this in some ways becomes investment money for them to really take advantage of that, to both improve and streamline operations, but also to improve customer engagement as well.
But Max, if I'm the CEO of, a retailer in a different life, how do I proceed? Okay, so IEEPA, that has been struck down. There's the possibility of refunds. That would maybe be a nice windfall here for some of my margins, but it's not something I can bank on necessarily.
Which is why you have to build in resilience and flexibility. I think that's been the real key story here. In some ways, it started with the pandemic in terms of diversifying away from China. But that sort of continuing on that sort of was on hold for a couple of years. But I do believe that because of the pandemic, retailers really had a head start on creating resiliency in their supply chains, and they really doubled down on that in the past year. And so, the best way to be able to deal with uncertainty is to have the flexibility to to address whatever scenario should come about.
I'm glad you brought up the pandemic, because we did actually see, if we want to sort of find the silver linings in these clouds, the pandemic did force a lot of companies, certainly on the retail side, to really take a closer look at their supply chains, logistics, and improve them in a way that they might not have had. With regards to the tariffs, it's been basically a year since these have sort of hung over the market. Are there certain companies that you've seen have already done this in a way that you would sort of applaud them for?
Yeah, I think that in particular the apparel retailers have had to really look at this because they were so reliant on manufacturing outside of the U.S. So I would say in particular the apparel retailers. I think some of the companies that have just made bigger investments in their supply chain overall. Walmart, probably a good example, would be another company that has had a lot of reliance in more narrow markets historically, but have done a really good job of looking on how to create resiliency and flexibility going forward.
All right, Max, great to catch up with you. Max Kahn, president of Coresight Research, and we want to keep the conversation going here with Bloomberg senior industry analyst Poonam Goyal has a great report out, a few reports out today about the potential impact of the Supreme Court decision on some of the major retailers like Nike, like Wayfair, like Amazon, and others. And Poonam, I had a really great one where you kind of talked about the potential tailwind that we could actually see from some of the refunds, but also saying, Poonam, that those refunds could take years actually to flow through.
Yeah, I wouldn't count on the refunds just yet. I think the bigger bet that we're willing to make is that the tariffs will be hopefully at a lower rate than what the retailers have seen. So that means they could see immediate to margin relief. Anything coming off the ships in the coming months could have a net lower tariff rate than they expected. But I wouldn't just, hang my hat on that fully, because as we know, the president is looking for ways to implement other tariffs to offset this announcement that we heard this morning from the Supreme Court. So I'd say it's still kind of all up in the air. Tariffs can go one way or another. For now, there is a bit of silver lining here on the margin side for many of the apparel and footwear retailers that I cover. Just because everything we consume is largely from the Asian countries when it comes to apparel and footwear. Right. And we are very dependent on that nation for our goods.
Well, that's where I want to go, Poonam, because as you mentioned, I mean, there's still a ton of outstanding questions here, both when it comes to the refund. That could be a multi-year process if it comes to fruition. Also, a lot of questions about some of these section tariffs and sectoral tariffs. But as you mentioned, I mean, some of these apparel makers, the footwear makers, they could see some of their margin actually get lifted a little bit to the upside. You highlight Nike as one of those potentials. I mean, put this into context when it comes to a company like Nike. What sort of range are we actually talking about here?
Yeah, so Nike's already called out a $1.5 billion hit to their margin from tariffs. So as these pressures ease, we'd expect that number to go down. How much of a reduction can they actually see will depend on what happens in the coming months. If new tariffs are introduced, if there is a 10% tariff that goes into effect, then the benefit that we expected to see earlier this morning kind of gets cut down to almost half, in my view, if I was to think that there was a 20% tariff prior to today.
Well, that gets to the idea, though, too. I mean, they just put out some recent guidance, and we talk about that $1 to $1.5 billion in incremental hit. It was several 100 basis points to the margin side here. Is this a situation where they would even feel confident enough, if not next quarter, maybe the quarter after that, to actually maybe revise that guidance in a more upward positive way?
I think next quarter they could be, because in the next few weeks, in the next few months, we should be able to kind of get a sense on where the situation with tariffs is going. We know right now, as of right now, we do know that it's a net positive based on just what we've heard. But if other tariffs are introduced to kind of level what was lost from the Trump administration, then we could go to a situation where we're back to square one and everything's kind of status quo.
But one issue, though, is that, I mean, they're now saying that this 10% tariff that Trump is basically saying that he does have the power to do, that's across the board. So that wouldn't be country by country. Based on the countries where you see a lot of these apparel makers like Nike source their goods, not just China, but obviously Vietnam and Bangladesh and some of the others, is that 10% level below what some of these companies are paying right now?
Yeah, so when I think of a country like Vietnam, where much of the footwear is made, the tariff that's been repealed was greater than 10%. So therefore, there is some relief. But the question is, will it go beyond the 10% in the coming months? Will he add in something else? We're just not sure what the situation will look like. But for today, I would say it is a benefit to margin.
All right, Poonam, really appreciate your perspective on this Friday. Have a great weekend when you get there. That is Poonam Goyal of Bloomberg Intelligence. Let's take a quick look at some of the big movers on the day. And Nike, again, it wasn't a big mover, and that in and of itself is interesting, finishing down about 0.3%. As discussed, Akamai also sinking, but this time down to about 14%. And then Corning, one of your big movers on the day, higher by more than 7%. This is The Close on Bloomberg.
We talked about some of the big apparel and footwear makers potentially affected by this tariff ruling. That includes a name like Nike. I had a chance to catch up with the CEO, Elliott Hill, just last week. He brushed off some of the concerns about tariffs, saying that's already sort of been factored into the company's overall vision, and they want to put a much bigger focus right now here on some of the design decisions and, more importantly, the reintroduction of its outdoor performance brand, ACG. We heard from him, and we heard from his lead design chief, Martin Lottie. I want you to hear what they had to say about where they think they can take the sportswear company next.
Milan, Italy, one of the design capitals of the world. Its narrow and winding medieval-era streets now doubling as global runways of luxury. Gucci, Prada, La Russomiani among the glitzy storefronts. But beyond the outdoor catwalks, the Via Monte Napoleone, Brera, and Tortona, U.S.-based sportswear company Nike is choosing to strut its stuff in a revival for its all-conditions gear line, an almost 40-year-old sub-label that in February was elevated to a standalone brand, akin to Jordan or to Converse. It's a formalization of ACG as a dedicated outdoor performance brand that Nike CEO Elliott Hill felt was best appropriate to unveil at the 2026 Winter Olympic Games in Italy.
These sport moments are critically important to our brand and, frankly, to the industry. They're tentpole moments, whether it's an Olympics, a Winter Olympics, a World Cup, a Super Bowl, an NBA All-Star Game. And, frankly, they're really, I think, galvanizing moments for our teams internally.
It's also a reflection of the core ethos Hill has pushed since taking over as CEO in late 2024. Everything Nike does should focus on the athlete and athletic performance.
We thought there was no better place to do it than here in Milan when the eyes of the world were watching. There's no question that there is a movement to getting outdoors, whether it's in China or in Europe or in the United States. And we looked at the overall outdoor market and the opportunity that exists there.
The growth of outdoor sports, think ultramarathons, rock climbing, mountain biking, it is in fact booming, posting a record 181 million participants in 2024, with trail running a key driver. And that is exactly where Nike sees opportunity in its outdoor comeback.
So we decided to go after that through the lens of trail running, which is a point of strength from us, where we can bring innovation to the market and newness and freshness, and decided to do it with the ACG brand because there is some awareness already around that brand.
ACG's roots, they go back decades to the late 1970s when mountain climbers Rick Ridgway and John Riskelly scaled K2 in Nike long-distance Vector running shoes. Legend has it that they mailed the worn-out shoes back to Nike with suggestions for how to make them more rugged and durable for extreme outdoor conditions. That correspondence led to the introduction in the early 80s of the Lava Dome, the Approach, and the Magma. Though the actual ACG branding, that didn't come about until 1989. The line, partly because some of the marketing decisions Nike made, would eventually suffer from consumer misperceptions about what ACG was exactly supposed to be. It was later discontinued, then relaunched more than a decade ago, but struggled to regain its footing within the quirky, counterculture community of outdoor enthusiasts.
ACG's been through some fits and starts, and I am curious as to why there hasn't been that continuity in the brand.
With anything, it comes down to positioning. We're going for the wild ones. So you think about the outdoor world with a little bit of an attitude and a swagger, with an element and an approach around design and innovation.
Are you at risk of maybe alienating some of those folks who just kind of want to be on the fringe?
No, I think that's that is a risk if we just showed up as the big bad Nike. But I think this team, they live and breathe this space, so they understand it deeply.
One of those team members is Martin Lottie, Nike's Chief Design Officer.
In a push of the button, you can just release the air, and then it adapts to your needs.
From the inflatable Air Milano jacket to the radical airflow shirt worn by ultramarathoner Caleb Olson, the design team at Nike is relying on, yes, design, but also on science and technology to make a mark.
It goes from bigger holes to smaller holes, and it creates hundreds of air vents.
So these holes aren't just for show. They're not just for design.
It's literally physics in play here of imagine air being funneled through a funnel, and it actually helps you to cool down the body.
The balance of physics and fashion is central to Nike's process under Lottie. He is, after all, the man behind that iconic little black dress that Maria Sharapova wore at the 2006 US Open. It was a thin, head-turning, tennis taboo-breaking garment that was both athletic performance wear and a statement of high fashion. Lottie has walked that line for decades. This year, creating a custom head-to-toe look for Italian tennis phenom Jannik Sinner. Lottie's work, it reflects an effort to stand out in a crowded marketplace, one where industry surveys show trail runners are increasingly opting for competitors like Patagonia, Hoka, and Smartwool.
If you think about the outdoor industry, it's pretty serious, very top of mountain. So with ACG, it allows us to bring an attitude to it with high performance all at the same time.
You've been with the company for, almost 30 years now. As a designer, there was a period in recent years where a lot of people said the company kind of got a little boring. Maybe it wasn't being as risky, if you will. And I do wonder, under the new leadership and under the new conditions that we're seeing right now, are you taking risks?
You know, if you think about our heritage of the brand, it's about taking calculated risks. Athletes take calculated risk every single time they go on the court, pitch, or on the ski slope. Well, so do we. Like, if we truly listen to the voice of the athletes, that's what we do. That's part of our DNA.
I don't think you can ever just elbow your way in. You have to be authentic to the sport. And part of the sport offense is small cross-functional teams working against a consumer segment, in this case, trail running. And we have a really talented team that comes to work every single day and thinks about the trail running consumer.
I mean, there are a lot of names that already dominate.
Sure.
Salomon, Smart Wool, Patagonia. Is this strategy of going for that outdoor consumer, is that actually playing offense, or are you catching up to the rest of the folks?
We're always on the offense. We actually have a maxim that says on the offense always. And so the team's definitely approaching it from an offensive perspective and trying to make certain that, that we're coming with something new, fresh perspective.
I mean, you can tell me if this is true, and forgive my French, but there was some mantra going around, some memo saying create epic.
I guess I can confirm that is true. That's one of the mantras coming out of that building, and frankly, I loved it. I love the irreverence of it. I like the attitude of it. I like the commitment around it, and I keep telling this team, run. Don't ask for permission, ask for forgiveness, and they're bringing some really interesting things to the marketplace.
Nike CEO Elliott Hill and his chief design officer Martin Lodi, and we should point out, I don't know if you saw that memo. So it was their words, not my words. I was just reading what was off them. But it gets to this idea, though, too, of that this was a company that a lot of people felt was not taking risks under the previous CEO. Mm-hmm. And when Elliott Hill came in, and that memo was not written by him, it was written by one of his executives in the C-suite. But it was very clear, what the mission was. It was just, look, go out there and just create stuff that people are going to talk about.
You don't want to go for round two here?
I don't. And you know this. I mean, you're a big runner, right?
Yes.
And we've talked a lot about, the Hoka and OnCloud and all these upstarts that have come in and taken over that performance space that Nike, to a certain extent, had left behind.
Absolutely. And I think that message that they want to refocus on the athlete, that's really key. I mean, I think about some of my peers in the running community. That's why Nike has lost share, because for a while there, they did lose that focus.
All right. Well, they're trying to get it back there. And of course, now maybe they have some issues with regards to tariffs to sort out as well. It's been a long day, a long week, even though it's been 4 days. But we're going to set you up for what to watch for the following week when we come back after the break. This is Bloomberg.
It's the news of the day. The Supreme Court striking down President Trump's global tariffs. So what happens next, and what are the implications of the ruling for Trump's tariff agenda? Let's ask Greg Stohr. He covers the Supreme Court here for us at Bloomberg. And Greg, I mean, just rewinding, we had been, getting some written statements, opinions from the justices. So in some ways, this wasn't necessarily a shock to see this ruling come down at 10 a.m. the way that it did.
Well, we knew that opinions were coming out today, and we knew that the court had been expediting the tariff case so far. So it was definitely at the, prominent on everybody's radar screen. And, the outcome wasn't all that surprising either, given what happened at the argument. The court was overall pretty skeptical when they heard arguments back in November.
I am curious about some of the language that we saw in the dissent, particularly in Kavanaugh's dissent, which I guess some, people who are cynical, including myself, would say it almost sort of set a bit of a roadmap for Trump of how to sort of maintain these tariffs to some degree or another within the bounds of the law.
He did do some of that. Now, the White House was already talking about doing that. That also is not a surprise that the White House came out today. The president came out today and said, hey, we're going to impose tariffs using these other legal authorities and do pretty much the same thing. The question will be, is it really pretty much the same thing? Those other authorities, including that 10% tariff the president talked about, are either more limited or more cumbersome, or in some cases just involve tariffs on a particular sector. They may not be as comprehensive, and the president may not have as much freedom as he's felt like he has to just say, hey, I'm going to slap some tariffs on those countries that are doing business with Iran or who are opposing my bid to take over Greenland.
All right, Greg Stohr, our man who covers everything Supreme Court for us here at Bloomberg. As we sort of wrap up the day here, of course, with that look back at the Supreme Court decision earlier today, and now a push ahead to what next week might bring for financial markets. On Monday, we get some economic data. Katie, U.S. factory orders, durable goods, and some earnings.
Yeah, earnings from the likes of Hims and Hers should certainly be interesting. You think about the tussles that they've had with Novo Nordisk. And then on Tuesday, It's the State of the Union.
Yeah, Trump is going to have to deliver some sort of economic message, some sort of policy response. We're also going to get earnings out of Home Depot, Kava, and HP, and those earnings continue in a big way on Wednesday.
Oh, yeah, that's when we get the big guy. NVIDIA, I will not be here. I wonder how many times I can say that. But, of course, that will probably set the tone for sentiment.
The earnings continue on Thursday. And we just want to point out, there are going to be on Thursday and Friday in the political space something to keep an eye on. Hillary Clinton and former President Bill Clinton are scheduled to give testimony before a House committee behind closed doors on the Jeffrey Epstein files. This is Bloomberg.